Well, well, well. Interesting day. Firstly, I do apologize for not being able to attend to today's live stream because it has been a wild day for sure. Haven't been at my trading desk. I've just been on the move. And I'm witnessing madness unfold in the stock market. Yet, the S&P still hasn't managed to close negative 2% in 107 sessions. That is wild. That just goes to show the resilience of what's going on in the stock market. We know for sure that everyone is holding on to this AI boom. When will it burst? You know, when's the bubble going to say, nope, that's enough now, we're done? Bloomberg yet again warning investors, start hedging yourselves because it looks like things are getting pretty exhausted. What we're going to do is just break it all down for you. Had a good day on cryptocurrency, haven't we? Bitcoin seemed to have decoupled from the stock market, or has it? I'm going to present to you a logic by the principle of bids and asks. And we just need to wait and see if this is true, because if Bitcoin is going to decouple from the stock market, then this is something we need to see happening. And I'm going to explain it in this live. Equally, there is one aspect to it that could mean that this move up might stall. It all depends on what the investors of Bitcoin are planning on doing next. So I'm going to break all that logic down for you in tonight's live, ladies and gentlemen. So let's get with the program. I'm going to dive into what's going on with my positions in bullish and circle. Had a nice little move on circle today, and then it's just kind of pulled back. So that's the story. But we'll dive into that very, very shortly. And we're also going to talk about some stocks that are up on volume because according to Bloomberg and some heavyweights in mutual funds, they're saying to everyone to start hedging yourselves. All right, so I'm going to give you a couple of examples on where that might be possible for you all. If you do have portfolios that are made up of stocks, and depending on the industry sector that you're made up on, it's going to help you understand whether you should be part of that rotation if the market does start to pull back. So let's get with the program, ladies and gentlemen. Mad love and respect. Oh, what was that? Talk about Crow. We'll talk about Crow. All right, here it is. Timeout called as rally wanes. First things first, ladies and gentlemen. The article goes on to say that the rally itself has had a little bit of a problem. All right, seems like everyone is somewhat exhausted. And you can see here that wait, not that one. Here we go. Volatility vanishes as the S&P avoids 2% drop for 107 straight days. Bloomberg starts to talk about it over here. I mean, there's no big down days, which is true. There are no big down days. If we just go over to the market itself, you can see that the NASDAQ, let's have a look at the volume today. Now, it's just a whipsaw movement today, ladies and gentlemen. It was terrible, but the volume today is just below average, which is okay. We need to see that. And the market looks like it's finishing around minus 0.33%. Going over into the yields markets, you can see that there's a little bit of a mix. Today, the yields move up, the stock market goes down. Just get that in your minds, okay? When the yield market starts to go up during the RTH, which is regular trading hours, as in the open of New York, then you've got to really consider that if the yields are moving up, is the stock market or the tech market going to suffer for it? And today is a fine example of that. You can see at the start of the New York Open, the yield started to climb up. The 2-year, the 5-year, the 10-year. I mean, 1% up on the 10-year. That is absolutely wild. And the 30 years coming in at 4.75%. I will say this to you, though. Anytime, and this is genuine now, anytime the 10-year or the 30-year hit 5%, as a rule of thumb, anytime those two yields hit 5%, you can guarantee that participants are going to jump into the bonds to lock in that yield. It doesn't spend too much time at those yields because they're getting 5% on the 10-year. I'll take that. You know, and if you're dealing with millions and millions of dollars and you're going over to the US government and saying, here we go, you can give me your bonds, I'll take that at 5%. You know, I don't trust your bond anyway, but at 5%, I'll take that. Anytime they hit those yields, that's when investors are going to start really taking advantage of the bonds market. So if you're just sitting waiting for that to happen, you can bet a fair amount that anytime they do hit that 5% region, they're going to pull back, or the yields, and the bonds market's going to move up beautifully from that. Okay, so just take that into consideration. Now, NASDAQ. Oh, God. I projected this today, right? No, this is not what I projected. Today, I projected that the NASDAQ was going to come down, test this stopping volume candle, and then try and make a reversal back into the vectors. That is not what we got, ladies and gentlemen. We got our Euro trade nice. We were expecting Euro to try and make a little bit of a move up to then come back down. And Euro ended up doing really well because the dollar's back again. I'm telling you, don't sleep on the dollar. Euro came through with a nice move. Didn't quite give us that much of a retrace, but then they just came into it and they just continued to go down. I was expecting a little bit of a bounce from here, but now that they're back into the recovery of the vector candle, we can assume that there could be some form of support coming into Euro here. But even heavyweights across the board are saying that Euro's going to really struggle to get above that 1.1800 region. So it looks like that's coming into fruition. But this is where I was at with the NASDAQ. Look at this, man. I mean, gold today, like I said, gold's going to pull back. But damn it, man, gold didn't just pull back. It took a shoe bag to the downside. But this pullback is consistent with accumulation, all right? Just for the sake of the actual trade itself, yeah, it pulled back. And I wanted to see it come back up in line with the block. But you can see it's invalidated that block. Now we're waiting to see if this logic is going to hold out. Now, this is where it gets interesting, all right? NASDAQ. Damn, NASDAQ today. I anticipated that NASDAQ was going to try and come back down and try and give us at least a 1% gain from yesterday's madness, okay, of a stop run lower and then try and make a recovery back up. We didn't get that, ladies and gentlemen. Instead, we got ourselves a nice little flavor, some dump to the downside, okay? And then they gave us that stopping volume candle. Yeah? Stopping volume candle. I've done a video on it. Where is it? Hold on a second. Wait there. Wait there. Here we go. Look at this. Stopping volume candle. Go away. Go and watch this video. Why you need to study this reversal candle, okay? This explains it all. And it did it again today on the NASDAQ. I haven't been able to trade today, but look at that. It did exactly the same thing right there. Nice little stopping volume candle for you. Now, NASDAQ has made that little bounce, but I will say that the stars of the show today were cryptocurrency. We projected Bitcoin today to make a little bit of a nice movement to the upside, wanting to see the move down and then try and see the move to the upside. And let me explain to you, positively correlated assets, they're not correlating as much now. You can see that everything is just driven by news, hype, anticipation, hope. And cryptocurrency, I'm going to get into this story right now. But cryptocurrency today, I wanted to see Bitcoin pull back ever so slightly. And this range right here is the initial balance. We wanted to see them come into it to then try and make the reversal to claim out the 113,987. Okay. And Bitcoin came through wonderfully. Came and hit that 113,940. Wow. Wait a second. 987,940. Can't complain about that. Nice little play, but didn't quite give us the reversal. It held into the actual initial balance and just didn't stop going up from there. Happy days. Going over to Solana. Solana was the one that was a little bit tricky, I'll be frank with you. We go into Solana's play and we can see Solana. I wanted to see Solana hold out, coming away from the Asian session low region. And then I said, wait until you see a breakout of the initial balance low, which is 212.93. And in the end, we ended up getting the 212 right here was the entry. And then they gave us the pump to the upside, but then they equally then returned it back down again. Okay. And the same logic came through with Ethereum, but Ethereum was brutal with it. Look at this. Ethereum wanted to see 4,283. And in the end, we ended up getting 4,206. In other words, someone said in the Discord, Ethereum's building a bridge. It really is building a bridge. And this is a problem, which is going to lead me on to the next logic right now. Has Bitcoin decoupled from the stock market? Let me explain. So, regardless of whatever we're knowing about cryptocurrency, okay, you've got this story here that the US Strategic Bitcoin Reserve Audit is now 172 days overdue. Wonderful. Thank you so much. All right. That's great. It says Donald Trump's ordered audit of crypto assets intended for a Bitcoin reserve and the stockpile, digital asset stockpile is now overdue by 172 days. What does that tell you? What priority? Clearly not. Because if there was urgency, this would have been done. Maybe that's why Bitcoin is doing what it's doing. Now, let me explain something to you. Before we start getting into the idea of Bitcoin dominance, okay, yeah, Bitcoin dominance is starting to move away, which is awesome. We can see that, and it looks like it could be getting ready to start marking back up again. I'd like to see dominance get back up in towards the 59.38 region. That's what I'm expecting of Bitcoin, but this is what we need to see happening first. If you go over to Bitcoin's price action, this is on the hour time frame. Scrap that, go over to the daily, okay, and understand where we are. We have managed to find support inside of this range, and you've got this violet vector candle block right here, which is very important. It's going to tell us where there is interest inside of this zone. Notice they're breaking the vector block with the vector candle. Interesting. Anyways, so this is my logic here. In the update that I did earlier on today for the Platinum members, okay, I've been starting to introduce a video on the CoinAnk. So every single morning I do a 1.5, 2 minute max video on the CoinAnk. And the logic of the video was going into the idea that we were waiting for Bitcoin to start making a little bit of a recovery back up into these offers, okay? The higher concentration of offers that you see right here, the more likely, if price is going to stabilize, more likely we're going to see price try and make a recovery into that range, okay? And that's what happened this morning, guys. We saw that little move to the upside, okay? Now, with that being said, let me get to the point that I'm trying to make about Bitcoin and whether or not it's decoupled from the stock market. Let me draw your attention to this. Look what's been going over the last few days, okay? You've seen collection of bids. Do you know what was up here earlier on this morning? At 100 and, where was it? There was a huge order. I need to find it. Wait there. It was here. Where is it? Here we go. No. Where are you? I need to find that so you guys can see it for yourselves. There we go. At 112,670 today, there was an order for $101 million to sell Bitcoin at that price. Okay? And I said that if they're going to clear that, that's going to fuel momentum to the upside. And that's what it did. But this is really important to understand. 101 million was sold at 112,670. Stick with me on this one. The problem we've got is this, guys. All of this accumulation, right, in terms of bids, is being sold at speed. They're selling it too soon. What we need to see happening is we need to see the offers coming in thick, higher. You see this thing here? That needs to be full. We need to see a lot of it, because then that would be on the assumption that these dudes that have been bidding here and the guys that are bidding here are favoring higher prices. That means the longevity of their positions implies that they're going to stay in the trade for longer periods of time until it hits a price point that they're anticipating that, yeah, maybe Bitcoin could surpass this level. Okay? Now, what we need to see happening is Bitcoin really showing support on the bid side as we go higher. That means we need to see more of this. You see bids coming in at 112,356. Okay, someone's going to buy at that point. Now you've got this little cluster right here, which these are recent orders that have just come into the market. Okay, but they're not really that big. Okay, but when you've got all this here, this is good news. Like 37 million to be sold at 114,834. Right, and then you go even further to the top side, another 40 million to be sold at 115,88. Right. So when you then go over here, you can appreciate that there's been orders here like 10 million, and then you've got 31 million that was positioned right there. Okay, so you make the assumption that this dude over here is going to sell when it gets all the way up there. Okay, that's the logic. But the problem that we've got is they are selling too soon. And that gives me the idea that maybe Bitcoin, if it's going to continue higher, we need to start seeing more participants coming into play. Now, what could fuel the idea that Bitcoin is just dismissing the stock market and doing its own thing, right? Well, you've got to understand the actual ETF itself is helping us out, all right? But given that BlackRock have actually sold $980 million worth of it, the balance is still the same thing, okay? We're not really seeing too much activity. Just quickly going over into it as well. We haven't seen them do too much today. I mean, there was this stupid little deposit to BlackRock, but then they added 22 Bitcoin today into the ETF. But I mean, it's not really seeing the activity per se, but When you see articles like this, Goldman Sachs abruptly raises its S&P 500 target and cites accommodative Fed policies. Well, they're expecting 6,800, 7,000, and 7,200. Why would they be expecting that? All because of the Federal Reserve and its policy rates going forward. See, right now we've got the interest rate cut, happy days. And we had some speaker earlier on today saying that he was cool with the idea that the interest rates were cut at the quarter point. Awesome. Now we're anticipating more cuts, all right? And that's going to be relying on the data that comes out. So what do we need to see Bitcoin doing? So from an order flow perspective, right, go to the 4-hour time frame. This little retrace back up is a little bit of an issue for me because it would need to sustain itself and clear above previous session Asia high, right? It needs to clear that range to then validate the idea that there's going to be a possibility that Bitcoin is going to come back towards this 119, 120,000 region, okay? It needs to clear back up above that point because once it does get back above that point, it would then be above moving averages, right? And then people would see that it's trending upwards, so they would jump onto the bandwagon to believe that, yeah, Bitcoin's going to start moving up again, which then equally means that participants in the order book are then going to say, okay, then I can now offer more prices. That means I can sell Bitcoin as it goes higher. So then we're going to want to see more of this 37 million sold at the top side, and we're going to see more of it coming into play. The more we see participants coming into the market to sell Bitcoin, the higher Bitcoin's price will go. If we don't see that many participants coming in, look, it's concentrated. Look at all the concentration of orders right there. What's this gap here? There's nothing going on there. And then you move up ever so slightly, and there's someone that wants to sell $500,000 worth of Bitcoin up there, okay? When you see gaps in the order book, kind of implies that there's not any consistency or there's no belief in the guys who are building positions and getting ready to offload them, that they expect that the future looks like Bitcoin is going to hit those levels. The only way we can verify that is if the participants on bid side continue to buy Bitcoin as it's moving up on the retrace, okay? So when you go into lower time frames, this right here would be deemed as the retrace. So from this low to this high, this would be the retrace. And if you're going to get your Fibonacci, you'll understand that that is the midpoint of that range. And it seems to have reacted very well from it, okay? So the idea is that if this zone is going to sustain itself, then Bitcoin would need to start climbing up and show interest on the offer side, okay? But after today's wipeout in the stock market, participants, let's just really work it out. Has it been really a wipeout or just some profit taking? Well, oil making a nice move to the upside. It's continuously going up, of course, because of the Ukraine-Russia story, all right? And the fact that it's going to be hitting certain Russian supplies, it's going to equally lead to oil's price going up. Now, going into the dollar dominance is moving back up again, okay? And when the dollar moves up, that means investors need to start taking some profit somewhere. And I do believe dollar's going to keep climbing up. And NASDAQ is going to have a little bit of a problem with that if the dollar keeps on coming up, guys. It really will, because then that means that participants are going into positions of cash. Now, let's work out the idea of hedging. Will you get involved in gold right now? Quite frankly, ladies and gentlemen, gold itself is a valid place for you to start hedging, but is gold overvalued? Okay. Logic says that you want to start, take this logically. For every retrace that happens on gold, what you need to do is when you buy into it, you have to buy into it with the logic that there's going to be a continuation back up, right? Because the interest rates are going to get cut. That's what you're looking for. So for every dip on gold, you load up and you anticipate that the interest rates are going to get cut, yield on the dollar is going to go down, so then naturally gold's price continues to go higher. I think by year end, gold could easily clear 4,000. That's my price point. I believe it's going to clear 4,000 by year end, okay? But that would only mean that if the Federal Reserve comes out and says, no, we're not cutting rates this year, gold will slump. It really will. So we're relying on the idea that gold is going to go up because the interest rates are going to get cut. And when you get these price projections like this from Goldman Sachs, and the fact that the stock market hasn't had a 2% drawdown in one single day or in 107 straight days like that, ladies and gentlemen, you can only assume that the market still has the weight to continue to the upside. And these pullbacks that you're seeing in the market, just buying the dips. That's all they are. So the logic then goes over to Bitcoin. I mean, look, just before we even get into it, look at the volatility index. Where is it? Hedgers, are they actually doing anything? No, they're not. It's at 18. They're not interested. They're not interested in exploiting hedging yet. So as long as this goes down, the stock market continues to go up. Okay, cool. Quickly going into it. Any questions? Tino, I'd love your thoughts on platinum gold ratios and rough. You know what, my friend? I actually haven't checked that out. So I'm going to check that out for you and talk about it in tomorrow's live stream, man. Crypto Kojak, you funny guy. Can we get a huge dip in stocks? Well, the only way the stocks are going to dip is if we do actually have a 2% drawdown in the day. And if we go over to the stock market, right, let's draw your attention. The stocks that were up today on volume, okay? Again, you've got that Saudi Arabia story. And the reason for that, ladies and gentlemen, when I spoke about it last night, is because they're going to start lifting laws that have prevented foreign investors from owning stock in certain companies in Saudi Arabia. So that makes sense as to why that KSA ETF started to pump up yesterday. Okay, actually, it's this one here. Here we go. Yeah, so here are the stocks that are up on volume. Now, let me just draw your attention to this. What are you seeing? Again, Integral Ad Science, Uniquare, Core, ClearPoint Neuro. What else we got? Sidra Therapeutics, Nanobiotics, Arbden Life Sciences, Invesco China Technology. Okay. You got Southern Copper, Excel Energy, Copper, GDS Holdings, Soleno Therapeutics. Okay, what are we seeing here? Energy. What else? Nutrien. Like Energy, again, Marvel Technology. What's that showing you? Showing you that there's already hedging coming into play. Here it is, Integral Ad Sciences. Provides a cloud platform for measurement and verification of trust and transparency of digital advertising, computer software. Okay? Good little shout this is. I mean, it is $10 a share. And fund owners play 81% of this stock. Has 3% debt, so that's all good. All right? It's a bit of a young gun, but it's only recently had an IPO in 2021. But something to take into consideration and pay attention to. But what I've been saying here, science and energy, right? What are those two industries? Energy, medical, right? What's that consistent with? The only thing that's missing from that is defense. And those are the three sectors that move when investors have the belief that there could be a recession or there could be a change economically speaking, right? So they're starting to pile themselves into those sectors. When you start to see science-based stocks, medical stocks, defense-based stocks, all and energy starting to climb, then you kind of know that there's a rotation happening. And if you're not seeing tech names like Nvidia or Meta, Google, Amazon, Apple, if you don't see those names appearing up on volume, then you kind of get the idea that maybe money is rotating out of the tech, because tech is the only thing that's leading everything right now. Let's just quickly have a look at tech. Nvidia down 0.82%. Microsoft up 0.18%. Amazon down 0.23%. Google down 1.8%. Distribution day. Meta up 0.7%. Apple down 0.83%. Okay? What's that showing you? It's showing you that there's no consistency with the Mag 7. All right? There's no consistency. If NASDAQ is up, those guys should be up. But you've got a mixed bag. Microsoft is up 0.81. Nvidia is down 0.82. Google is down 1.8%. Meta is up 0.7%. Shouldn't be like that. They should all be down or nothing. Now, who's the leader? I mean, you can see clear as day. Meta is the leader here. It's holding out. So when you see big down days like today, always go to the stock that sustains it. Always pay attention to that stock, because on down days, you can assume that that's going to be okay. On the good days, you can appreciate that that asset is going to absolutely kill it. Capiche? That should make sense. Isn't gold hedge? And then how is the VIX going down? Gold up if whales are hedging with gold. When Bloomberg tells you to hedge, right? It means that commercial traders want to get rid of their hedge. They've been hedging ever since. Look, here's an exercise for you. Go take the date, 22nd of April, 2025. Go all the way across and study that range. When I say study that range, go and highlight how many times gold's name appears in news anchors, right? Go and highlight what goes off in, economically speaking, what's going on here, right? They were hedging. They were preparing for the hedge. When gold trades sideways, commercial investors are hedging. They're preparing for the hedge. They're preparing for the next event. What event was the next event from April high going all the way through to the breakout of September the 2nd? Okay, well, let's actually just break it down to this range right here. Okay, and it broke out just 31st of August. Okay, what was this? Speculation. Interest rates. Are we going to get cut? Are we not? What's the inflation? What's this? What's that? They were all preparing for the hedge. It explodes to the upside. So the next logical thing is when they say to you, start hedging with gold and what have you, and start getting involved in it, they're only just going to come in and just take everything off you. You're going to sell, you're going to buy into that rally. Okay. So then when gold then consolidates again, what you're then looking for, hypothetically, if gold starts to consolidate, what will we get? Tariff discussions. Yeah. TikTok's going to be all good. China's actually agreed to everything as such. Inflation readings, manufacturing, price index, FOMC, we're going to cut, bang. Gold moves. Commercial hedgers prepare gold before they make it. Because everybody knows you go to gold because when you get an interest rate cut, the yield on the dollar goes lower, so you go against an asset that appreciates against the US dollar, which is gold. All right? It's an inversion to the interest rates. All right? Go and just trust me, study that. Go and study gold's consolidation periods and then ask yourself what makes it break out. They always hedge. This is the hedge. This is the release of it. This is the hedge. This is the release of it. So now you've got to wait for the next event. So if you do start seeing gold's price coming down, people are going into gold because Bloomberg told them so. Okay? Commercial hedgers will be selling into that. And then gold will then get to a point where commercial hedgers will start stepping in again as we get closer and closer towards the next event, FOMC, October. And then you'll see gold consolidating sideways, and then it then rallies up again. $4,000 is my next point. That's what I'm looking for with gold, even with silver. Silver's done great. We've been calling it for a long time, but I want $50 an ounce for silver. And it's getting ready to go. It really is. You know, that's my logic. Bitcoin is subject to more manipulation than the stock market. There are no regulations stating that the exchange can't sell or buy to move the market. It's all about liquidations. Correct. It is all about liquidations, and it has nothing to do with anything else, ladies and gentlemen. It's when people say Bitcoin has to do this, has to do that. No, it doesn't. It doesn't have to do anything, okay? Look, in front of you is the open interest, all right? Look at that, $715 million right there. Money that you guys are all borrowing, even myself, because we all use leverage, okay? That's open interest. The next spot is all the way up there. So logic says we anticipate that leverage up there is going to be transacted on. They don't care about your Bitcoin price. They care about how many of you care about the price that you're entering from, and can they shake you out of that position. If there's over 500, nearly 700 million in that area there, it's nearly $1 billion, ladies and gentlemen. That's money that has been borrowed by liquidity providers and what have you. And you know what? Whether you believe the market maker exists or not, just go and research it for yourself. They are liquidity providers. You think Binance is going to give you that money off its own back? No, it doesn't give you its cash. No, they are just there. They're the third party when you think about it, because your transaction, every time you take a trade, is between you and the liquidity provider. He sets his position up against yours. You set yours against his. And who's going to win first? That's all it is. So when you get a bit of profit, take it, because you're taking his. But when you lose, he takes yours. And because there's a lot of us all trying to do that, there's a gang of us right here, 715 million. Lots of us. And we want price to go up. Looks like Bitcoin's done well to respect that because we were talking about this area before. And it's now come back to it, and it looks like it wants to bounce from it. So if it can sustain this bounce, Bitcoin goes up. And that's just a case of time. Asta, yeah. Listen to this, man. This Asta stock. Listen, not Asta, but you know what I'm stock, but you know what I mean. Look at this. This is absolutely phenomenal. All right. It came into play on Friday, the 19th, and it's just said, nope, let's just go. I mean, look how embarrassing, man. It started off at the same price that XRP was at for 55 years. Look at that. 50 cents, man. Should have sold my bag and got into this just out of spite, just to spite XRP. And boy, we would have made a stack and a bean. But anyways, never mind. We'll just sit and deal with the fact that this thing right here is up 5%. It's up 5%. What's happened to XRP? Whoa, what's happened? Oh, with the BlackRock. Nah, man. Doesn't bother me. New DEX. Hyperliquid has now new competition. Well, yeah, I know that. But yeah, why is this moved up so aggressively? You know what? I will always talk down about XRP, but the one thing that I will not take away from it, when it moves, it moves. That's why we get so frustrated when it doesn't move, because when it doesn't move, it really doesn't move. That's another story. Yeah, of course. Yeah, it's going to go down again. What the hell am I talking about? $3. It's going to come down. It will come down. End of. Is volatility expected tomorrow due to the employment or GDP report? Yes, sir. Let's just fix this for you, ladies and gentlemen, and get this right. Look, tomorrow you have got, because it's been a no news day today, right? And tomorrow we have the GDP results and the unemployment claims. Unemployment claims to be coming in higher. What you need is unemployment claims to go higher as hell. You need a reading of 260 plus. That's what you need, because then that will make the Federal Reserve, right, we're going to cut the rates. We cannot have a slowing economy with the labor market going down so bad, okay? That will then fuel the market to return back up. And I believe that today has been designed to bring everything back up tomorrow based off the GDP and the unemployment claims data, okay? Tina, quick question. I have a Vanguard account and I want to move part of it to a brokerage that gives me crypto exposure. I need one that's ACAT compliant so I don't trigger a taxable event. Suggestions? I mean, you got BTCC in regards to compliance, but it all depends on what Vanguard account. I mean, without... that would be solid financial advice. I've got to be careful with that. I have to be careful with that information. I really do. Yeah. Nice question. Very good question. XRP is a money-making machine. Very reliable. Just hedge both ways and wait for a break, rinse, and repeat. This is true. That's what XRP does. It goes up 50 cents and drops down $3. No, I'm joking. No, it does. It is a good hedging asset. Securities using Ripple, Epic bringing real-world assets to XRP. Flare launch. Yeah, FXRP. Yeah, it just says it here. FXRP revolutionizes XRP's position in decentralized finance. Still doesn't mean shit, my friend, because it's going to go up $3 like it did, or like the 5%, and come back down 19. What do you want it to do? US bond markets is trading on sentiment, which blows out the 5%. It is trading on sentiment, my friend. Yes, the bond market is trading on sentiment. All right. But how many times have you seen the 30-year tap that 5% and it just instantly reverses? Okay. Just look at this. 5%. It just grabs people's attention, sentiment or not, because behind sentiment is money. That's what's behind it. And when you hit 5% on the 30-year, it always pulls back. Always. Because that's what it is, man. It's yield. You know? That's what I think it is. Tino, Bitcoin would reach 500K before your hair comes back. Bitcoin hits 500K, I'll grow my hair back. Simple as. Actually, let me make you a twisted price projection, right? XRP to $10, all right? And I'll shave everything off my face. Everything. I met you halfway with the hair, and I did that on my own accord, right? And I said to you, XRP to a certain price, right? And I will shave my head. Well, I did it beforehand. So if XRP gets to $10, I will clip this bad boy. I really will. It's going to go. I know it is. Roller coaster rides are not scary when you know how they feel. When ETH to minus 4,000. Oh, you know what? Ethereum, like I said, Ethereum is building a bridge. Yes. Tino, are you working with limit orders? No. Well, depending on what I'm trading. If I'm trading NASDAQ, no chance I'm working on limit orders. Don't want limit orders. I'm in trades. A lot of the time when I trade NASDAQ, I'm trading certain. If I'm scalping NASDAQ on a certain day, like if I was scalping today, I'd be trading NASDAQ imbalances. Okay. Because if you look to the left, they were all imbalances. And then I anticipated them to come down, but not as aggressively as they did, man. I didn't expect it to drop down so quick. But yeah, I'm on market orders in, out, in, out. Buy at the offers, ask, what is this fly doing here? But yeah, hitting the offers and the bids at market orders. Don't worry about it, Ken. Including the eyebrows. Yeah, I'll shave everything. And the eyebrows, everything. I'll get rid of everything. Everything off my face. What color are your pants? That's irrelevant, bro. Do you think the Russell 2000 has an impact? It's clipping the highs. Nobody really discusses it, but seeing a pattern emerging. Wait there. I will give you some information about the Russell. Here are some indices. Here we go. The Russell Index. Okay. The Russell 2000, yeah? Cool. The thing is, man, it's doing everything that the S&P is, but the strength isn't there. Look at your relative strength. Now, this is on the weekly, right? You can see that there's a little bit of a divergence coming into play. Highs are being made, right? But the strength isn't there. When we know what the Fed pivot path is, that's when your markets are going to start correcting, in my opinion. Cycles within cycles, pattern watchers, stay true until it all changes. That is very true. That's the logic. Cycles within cycles, ladies and gentlemen, because quite frankly, guys, if I'm going to give you this and then let you guys be, okay? You've got logic says W formation, rise, retrace level 1, rise, retrace level 2, rise, retrace level 3, peak formation, drop, retrace level 1, retrace level 2, level 3, peak formation. That is the logic, okay? If Bitcoin cannot clear the all-time high, we are in a markdown phase. Simple as. That's the truth. Maybe that's something you don't want to hear. But you'll welcome Bitcoin going up, but you don't welcome it going down. Explain the logic that when you're buying up here and you're excited, and then when it comes down here, you're looking at your investment thinking, why did I buy up there? So if you're going to be one of the people that buys up there, just have this logic of the cycle in your mind. If Bitcoin cannot clear out the all-time high and create another consolidation above it, you're in a downward cycle. You're allowed to be in a downward cycle. What's wrong with this downward cycle? It's where you buy it. And it all starts off with a W formation, a double bottom, consolidation, preparation of the bids, buying it up, and then they release. They offer out, reconsolidate, offer out, do the same thing again. M formation, drop, retrace, level 1. If it's going to go and clear out this high, then your markdown phase, okay, then gets challenged. So we're not in a markdown phase. We'll be going up. But if we're going to go by the logic of cycles, technically this is level 1. You do nothing until Bitcoin breaks out of this range at 118. As I said earlier, around 117 region-ish, okay? Needs to break out that range. If it can't break out this range and it continues to go down, it breaks down 107, then ladies and gentlemen, you are in level 2. Retrace back into that level, drop again, level 3, peak formation, sweep 96, up she goes. Because they have to consolidate and prepare price for the next rally. With that being said, mad love and respect. I hope you enjoyed that. I hope you make sense of it. Hit the like button, rate the live, hit the likes, you know all the flavor. And I'll be tuning into you.